Right. Okay. Morning traders. Welcome to Morning Cup by 8. Happy Monday. Aiman here. Right. So, looking at the S&P 500, well, the index managed to hold its rebound and climb higher by almost 50 points to close last week's session at 363.89.44 points. So, trend for the S&P 500 remains bullish, and from here we saw that the 6,200 level a strong support that could hold the gains towards the 6,500 points level, provided that the bullish momentum sustains. So over the week, development on the trade for US-China, China is now trying to negotiate to ease the US export control over the AI chip, which we see beneficial for the US chip companies moving forward if this happens. However, this morning, there's a news where AMD and NVIDIA have agreed to give 15% of its revenue sales from China to US government under agreement to obtain export license for this semicon. So we continue to monitor on this US chip companies, right? Okay, again, I would like to retreat on this week's event. So all eyes on the CPI as well as the initial jobless claims. So as market are trying to analyze on the whether Fed are cutting rates or no cuts for the next Fed meeting. Right, so looking at the Hang Seng Index futures for HSIF, it dipped lower on Friday's session, taking a short pause from the recent rally, declining 198 points to close at 24,834 points. So trend at this juncture still looking bullish as the recent halt was deemed as a healthy pullback. So uh, the market are now currently focusing on the 12th August deadline, which approaching tomorrow for US and China. So anything could happen at this point. So looking back here, uh, bullish still hold a technical advantage at this point in time. So we still hold our positive trading bias, where if the Hang Seng Index futures dip lower and breach the 23,000 level, we will shift our view. Right, so we have Hong Kong trading stocks for today. So we have Smart One Telco, stock code 315. So the stock has breakout above the 4.70 level. Sorry, for Hong Kong dollar and 70 cent. If the bullish momentum to remain steady, we can expect it to test the next resistance at $4.90 before it climb higher or further towards the $5.10 level. Now, if the momentum to reverse, make sure to have a stop loss at $4.50 as it indicates a possible change of trend, which also might affect your trades. So up next we have Zijin Mining, 28 stock code 2899. So if you can see here, the stock now is climbing higher with the bullish Marubozu candlestick last Friday. So looking at the overall trend right now, we think it is a good time to follow the uptrend momentum. So now now that the price have breached above the 23 Hong Kong dollar level, we might see the stock to hit or to touch the 24 dollar level before it might proper higher towards the $25 level. So a reverse below $21.80 will open the door for deeper correction shifting the trend. Right, so looking at the WTI crude oil futures, it trended lower with bears are still in control. Last Friday, the commodity declined lower to close at $63.88 after losing 47 cents last Friday. So initially we have a positive view on the market. However, it breached below our support level, and we shift our bearish trading view at this juncture. So with the index maintaining its position below the 50 and also 200-day SMA line, we think that the trend right now has changed to bearish. Now we are looking at the 60 US dollar level as our initial support, with the next level at $57. So sentiment wise, US and Russia tension has driven the crude oil volatility. Well, not to mention that the OPEC Plus has also agreed on the future or further supply hikes to offset the Russian export that will further deteriorate the positive sentiment of the oil market. So going back to Malaysia, looking at the FLI index, so it managed to hold its rebound and close higher at 1556 points after it added 5 points on last Friday. So trend here are looking positive so far, with the market now forming a new higher high. So with the the positive trend right now, the 1580 level looking possible to achieve, marked by the strong historical previous level. So at this juncture, 1500 support remains intact, and we do not discount for any pullback to happen. So I think so far, looking at the FKLI sentiment for the Malaysia market, still positive. However, investors are now shifting its focus to Malaysia's GDP on this week's Friday, as well as the development on the global interest rate outlook that possibly given its flow to the ASEAN market as well. So later, we listen to Yong on his econs update, right? So referring to our watch list of the day, we still hold our tech and export-oriented names on pending breakout, while adding Suncon and also Jayatiasa. Right, so moving on to our Malaysia trading stock. So today we have Suncon. So the stock has actually experienced a bullish breakout at 5 ringgit and 40 cent. So we expect the momentum to hike up, and the stock able to climb further to test the next resistance at 5 ringgit and 70 cent. Followed by 5 ringgit and 90 cent. So if it happened to break up below 5 ringgit and 20 cent and form kind of a new lower low, so this could indicate a near term pullback, further breach below this level. Right, so next we have Jatiasa Holdings. So the stock on Friday has breached above the resistance at 1 ringgit and 25 cent on the accelerated volume. So should the the bullish momentum to hold and continue to trend higher in the few sessions ahead, the counter potentially testing the next resistance at 1 ringgit and 35 cent. Followed by 1 ringgit and 40 cent level. So if it dropped below 1 ringgit and 20 cent level, this will open the door for further correction phase. Right. So apart from our trading stocks, well, for Suncon, our analyst still remains a buy rating on his report, mentioning that FA is still looking bright moving forward. So you guys can take a look at their stocks as well, keeping it in your watch list. Right. Moving on to our FCPO. Well, it has gained 50 ringgit last Friday to close at 4255 ringgit. So in terms of trend are looking positive so far. I mean, the broader trend looking positive so far. So technically, if you look at the chart, sentiment is still on positive side, given that Friday's closing are still holding strongly towards the upper territory of the bullish Marubozu structure. Now that the if the bullish momentum continues to strengthen, it will easily break out above the 4,300 level. So support remains at still at 4,100 ringgit level. I think traders are still waiting for the MPOP data today, assessing the SND. For now, we still keep our long position intact in the view of positive trading bias. Right, so I think that's all I have for today, and I pass the session to Sanchong. Happy trading, everyone. Thanks.
Thank you, Aiman. Thank you for all for joining the call. I will present on our economic weekly report published last week. So for now, we're still seeing investors struggle off of the latest tariff developments on India and semicons, where we see both Wall Street and also Nifty has seen little reaction post announcements. With that, we continue to stay optimistic given the aforementioned news flow, where global investors are undoubtedly desensitized to tariff trade by now, and will likely eye on a US trade deal to occur before a hefty 50% tariff on India imports on to the 8th of August. In addition, notwithstanding to the plan that for 100% tariff on the US chip imports, where we see the approach is less than punitive measures and a more strategic maneuver and reshoring the productions. With this, we foresee more assumptions which already given to Apple and TSMC are likely to take place to incentivize US firms to build a domestic semiconductor productions capabilities. Overall, we foresee a period of cautious stabilizations amid a clarity over US tariff on global economies. Asset allocation strategies still remain biased toward overweight equities, market weight fixed incomes, and underweight cash. On the semiconductor impact toward Malaysia, we think that the implications of the US threats on Malaysia semiconductor export are valued at US dollar 3.9 billion in 2024 and approximately 0.9% of a nominal GDP. Hence, this warrant a close monitoring to the developments. However, structural factors underpinning Malaysia electronic and electrical sectors has suggested that the downside risk must be contained, where we see as the sixth largest semiconductor exporters, Malaysia recorded over 600 billion ringgit in the export last year, and importantly, over 95% of this semiconductor export to the US originate from the American firm operating within Malaysia. Hence, this and trend indications of Malaysia facilities into US supply chains, especially by industry leaders such as Intel and Texas Instruments, has suggested that these significant disruptions would be counterproductive to US manufacturing goals. This firm, while already maintain a manufacturing footprint within the US, are also likely a candidate for exemptions, further mitigating the risk surrounding the tariff announcement. Besides from the tariff, we also see some developments surrounding the compositions of UDEF's Federal Reserve, which point to a growing bias toward monetary easing beyond 2025, where we see Christopher Waller currently floated as a potential successor of Fed Chair Jerome Powell, has consistently advocated for lower interest rates and was among the minority who are calling for the rate cuts at the most recent FOMC meetings. Additionally, Stephen Mirrens are expected to fill the seats currently held by Adriana Kudler, which term ending by January 26, has previously expressed a dovish stance. So this has favoring the accommodative monetary policy moving forward and increase the likelihood of further easing into 2026. We see that global stock pricing is currently reflecting our expectations, which is 2 rate cuts by December, while we still see some barrier of risk, including a scenario of just one or no cuts depending on the US data. On ASEAN-wise, last week, economic data out of ASEAN continued to show some outperform expectations results. We has Malaysia in IPI has rose over 3% in June. This is significantly above the global consensus of 0.5%. And similarly, on Indonesia, the GDP has expanded by 5.12. This is also outpacing the market consensus of 4.8. So this data underscore that Southeast Asia economies are still remain resilient, despite the broader headwinds coming from the US trade. On coming week, this week, as mentioned, as Aiman just now also, we have a data release coming from Malaysia and Singapore at second quarter GDP, with Singapore at 12 and Malaysia at 15 to August, with the growth expected at 4.2 for Singapore and 4.5 for Malaysia. BOT is likely to have a rate cut expectations, have a rate cut of 35 basis point on 13th of August, and the Reserve Bank of Australia also expected to ease the monetary policy by 25 basis point on 12th of August. So as the inflation has moderate and labor market has cooled. In the US, we have inflation data coming out 12 as well, which we expect a core price rising by 0.3% month-on-month. This is potentially influencing how the near-term rate expectation is going on. Thanks for listening to my briefing. I'll pass this to Adam for next. Thanks.
All right, good morning, everyone. We have a ground checks report, but let me just share my screen in a bit. Okay, so today we have a report on. Okay, I'm not muted. Okay, today we have a ground checks report on IGM Corp on its two ongoing warehouse projects in the Shah Alam industrial area. So the first one that I'm showing in the slide is the Shah Alam International Logistics Hub, or SAILH, which was awarded by Global Vision Logistics to IGM back in June 2023 for 654 million ringgit. So as you can see here, the one that they've been awarded is the first phase, which I believe is likely the triangle. Oh, sorry, not the triangle. The triangle along with the other rectangle portions. And if you see here, there's also some space for future expansion. So in that case, we do not discount the possibility of IGM to likely secure the future phases of the Shah Alam International Logistics Hub. So this is the artist's impression, and this is the latest development from the site. So that's the first one. So the second one is the Plot A Logistics Hub, which was awarded by Strategic Sonata to IGM back in June of last year for 584 million ringgit. So as you can see here, this is a site for IGM's Logistics Hub. And then there's another project which is being built by GDB or GDB Holdings, which is actually from the same client, but slightly at a higher price of 866 million ringgit. Just to note that back in March of last year, this is what we saw for the Plot A Logistics Hub construction site. So basically, there was nothing really much being built. But as we passed by in July or last month, we saw that they've started to build high type of structures with a lot of cranes being deployed. So we think that, there's going to be a lot more recognition coming from this project for the reporting quarter ended June 2025. And just one thing to show, this is also what we can see from the highway for GDB Holdings warehouse project. So you can see there's a lot of cranes over there, and to a certain extent, you can kind of like view it as a valley of cranes. So long story cut short, we think that there's going to be a lot more of all this logistics demand in Shah Alam industrial area, especially with Maersk, which is the major shipping liner in the world, also has a 2.1 million square feet warehouse situated not too far from these two projects, which is a testament to the high demand of logistical needs in the Shah Alam area. So all in, we actually revised our target PE for the construction arm to 18.5 times from 15 times previously to reflect the dissipating potential geopolitical and trade concerns, especially with Malaysia getting a lower tariff, reduced tariff of 90%. So we derive a new target price of RM3.73 from RM3.30 previously. So an upcoming catalyst would definitely be if IGM could secure any new data center jobs in the very near term. So that's all from me, everyone. Thank you for dialing in for today's RGB Morning Kappa at 8. We will see you tomorrow at the same time and same place. Have a nice day.